All right, let's get started.
All right, let's do it.
So, welcome everyone to the Light School's live stream. Today, I'm really excited to introduce my first guest ever on this show. This is the Cryptotaxgirl, aka Laura.
Hey, wait, I didn't know I was your very first guest. So much
It,
pressure.
yeah, well, we can be nervous together.
Well, thanks for having me. I'm excited.
Yeah, and I think taxes is such a good topic. It's really practical and totally fits like the vision of like the Light School to help educate people on like pretty complicated stuff. So, uh, hey, so Laura, why don't you like tell me a little bit about yourself? Like, when did you first get into crypto?
Yeah, so crypto, let's see. So when I was back in college, I had like a professor who loved crypto, I guess. He was probably the first person I ever knew that talked about it. And he did this whole lecture on Bitcoin, and then we all had to like write a paper on whether we thought like Bitcoin had a future or not.
No
And so
way.
that's when I like first learned about it. But I mean, regrets for not buying it back then, to be honest. I was just like, oh, it seems cool. But I'm like this poor college student. I'm like, yeah, I don't have any money. So maybe one day I'll have some Bitcoins, but not now. But luckily, my husband, he got into crypto pretty early too. I think it was like 2014. And so when I met him, he like, I don't know, somehow we brought it up and I was like, oh, I wrote a paper on that. I'm an expert. But by then, like it had even made more, it was like changed even from when I did my paper on it. And, obviously it keeps changing and it's so much different now than it was
Oh
back in
yeah.
college. But so he got into it then. So then I kind of got into it more through him because he had it. So I was like, okay, now I want some too. And then, so we started with like Bitcoin, of course, like everyone else. And then slowly just kept adding some more to our, little crypto holdings. And I think we did Ethereum and then Litecoin was our next one right after that. And
Nice.
so I think, yeah, we got into Litecoin because it just like was a new one. And he did probably more of the research about it, but we ended up getting it. And then we were like, we're talking to some of our family who got into crypto. We were trying to convince them all to get into it. And my brother-in-law was like, okay, yeah, I think I'm gonna do it. And then we're like, yeah, you should get some Bitcoins just to start. And then he's like, so I bought like all this Litecoin. We're like, oh, really? Why? He's like, because Bitcoin's just too expensive. So I had to get Litecoin. We're like, oh, you can actually buy Bitcoin in like smaller pieces. Like, oh, well, I got Litecoin. And then it was like right before it did that like nice straight line up. So he's like, Litecoin is the best. So now we always like cheer on Litecoin together. It's our new bonding.
There it is, Litecoin, folks, bringing people together. Love
Exactly.
it.
Yeah, so that's kind of been like my journey with crypto, I guess. But the tax stuff kind of came in because I guess I'm like a pretty big tax nerd. Like as much as I thought my husband was like a crypto nerd, I'm realizing now that I'm like even more of a tax nerd. And
Okay.
so he, was always talking about crypto and I'm always talking about taxes. And so when he started talking about crypto, I was just thinking like, I wonder like what the tax consequences are of like all these different things he's telling me about and like especially the new things like airdrops and forks like that weren't around
Oh my
like
gosh, yeah.
a long time ago. And so I started like thinking about it. And then I started, I'm always just like looking up random tax laws. I'm just really nerdy like that. So I look it up and I was like, hey, like, I think we need to like start reporting this stuff. And then like, and I'm like a CPA, like with public accounting. And like, I was asking my colleagues, they're like, yeah, it just seems too complicated. I'm just not going to worry about it. I'm like, but like, I think we should worry about it. So I was looking into it and then like realized that there's like a lot more behind it than I realized. So I just decided to make myself the expert on it because nobody knows what they're doing. There's tons of bad info out there, like so many blogs and YouTube videos that are just like not true. And I don't want people to get in a mess and have to like pay interest and penalties later or just, yeah, it just seems like it's a mess out there. So
Yeah,
I'm coming
that's
in
the
here
thing.
to
Like
spread the crypto
cryptocurrency
gospel.
is like such a new thing and such a new concept. And it's like totally reaching a totally like different audience than previous people, right? Like, so you have the millennials, like the really young people that are buying crypto, but they've never dealt with like wealth management or
Right.
investments or anything like that. So
Yeah, like
um,
most of them don't even have like stocks. Like crypto's like the first thing they've invested in. And then like,
totally.
yeah, it's new for everyone, but like it's also like definitely new in the tax law. Like the last time they released anything about crypto was 2014, which was like crypto is so different since 2014. And like 2017 was the year like so many people got into it. And so now
Right.
there's all these
Right.
people and like a lot of people saw some like pretty sweet gains. So then now they're like, I made all this money. Like I feel like I should report it, but I don't know what I'm doing. And like I just day trade every single day and now I'm like screwed. So just a lot of people who are new to the space, who don't know what's going on, like especially don't know what's going on about taxes. So just here to like spread the good news that everything's gonna be all right.
That's great, and I'm so glad that you're willing to come on my show. And I feel pretty confident taking your advice, especially because of your personality. It sounds like you're a tax nerd, just like how I'm a Litecoin crypto nerd. So yeah,
Yeah, nerds unite.
totally, totally. That's what this space is all about.
Yeah, basically.
All
I feel
right.
like it's my own people around here.
All right. So I think like the hardest part about taxes is figuring out like what exactly is a taxable event, right?
Right.
For me, like first you got to think about like what country you live in. If you live in the U.S., then you have to figure out what your local state tax laws are, and it's just kind of confusing because it doesn't seem like there's a clear cut like guideline on like how to figure this out. So, what would be your advice? Like, what would you say are some events that are taxable?
Yeah, I would say like first off, my big advice is like learn just even if you don't learn all the details, like obviously like there's so many random nuances and details you can learn. But I think just like even just getting big picture, like understanding what all these little implications of your day-to-day transactions are, definitely will help you going forward. But yeah, like taxable events, like there might be people out there who've never even heard that word, but taxable events means you do something and it triggers some sort of tax. So the biggest ones out there are definitely like selling, using, or trading crypto. And I think everyone can kind of like wrap around their head like why selling would be crypto or why selling would be taxable. Like
Right.
you buy a Litecoin for $100, it goes up to $1,000. And then you sell it for US dollars. It's like, okay, I just made 100 into $1,000. So now like $900 just appeared out of nowhere. Like I need to pay tax on this gain. But like other ones, like trading for one crypto to another, like a lot of people I know just were like completely oblivious to that being a taxable event. Like even myself, when I read that first, I was like, oh shoot, like I need to get my tax stuff in order. And so
Right.
that is like, because I think it's, especially with all the new altcoins out there again this year and stuff, like people love just like buying a ton of random ones, like buying some Bitcoin and then buying a bunch with the Bitcoin or buying a bunch with Ethereum. And so it's just like, it's fun, but it's making a tax mess for yourself. And then even like, yeah, purchasing for goods or services. This is one that I never considered myself to be taxable until I really like sat down and thought about it
Right.
because um like I think it's cool to use my crypto. Like that's the purpose, hopefully the long-term purpose of having this crypto. And so um like if you want to buy a pizza with crypto, like that'd be super cool, but it's also a taxable event. So you just have to like keep really good records if you are in crypto and if you're doing a lot of things with them. I mean, even if you're not doing a lot, you still want to keep really good records. That's like my biggest advice is um and don't wait till the end of the year. Like try and like reconcile every month, every quarter or something. Just so you can kind of see if you're in a gain position or a loss position and just keep track of everything. Because right now, the way it's set up is like, so for example, like with stock, right now, like Fidelity or like Vanguard or whatever you're investing with, they're in charge of like keeping track of all that stuff for you, like the basis, the holding period, the proceeds, whether, these different things apply. And they just issue you a statement that you just like put on your tax return. It's
Right.
super easy for you. And the government gets that information. So they just like make sure it matches, you're good to go. But for crypto, you're totally responsible for reporting everything. You're responsible for keeping track of everything. Like Coinbase isn't responsible. No one is responsible except for yourself. So you need to keep track of it. You need to report it correctly and do your best. Like if you're feeling overwhelmed and just like, I'm just not going to report, like that's the worst thing you could do
Right.
because intentionally not reporting is like tax evasion. It's like a federal offense. You don't want to get involved in any of that stuff, but just like do your best having something on there is better than not having it correct. But obviously you want to try and get it correct. But
Yeah,
do your
so it sounds
best.
like to me that like there, even though decentralization is awesome and the whole purpose is to empower people, it means that we have to go back to work, right? That we have to take responsibility for our own purchases and records and all that stuff. And I think that's like a lesson for us, because a lot of these centralized services, they kind of what you call it, they disable us from being empowered by relying on the services, by relying on them to align the stock buys and sells for us, and then sending us like a tax receipt at the end, you know?
Right.
So,
And yeah,
mhm.
and I think too, it just like makes us more like aware of our own financial situations. Like
Exactly.
if I have some, like I have some random stocks and some mutual funds and stuff, like I can't even tell you like the value of the S&P today. Like, like I just like, it's hard to, like, I just don't think people pay as much attention. Maybe that's just me, but like, I feel like I could like tell you the price of like Bitcoin on any day or like Ethereum or Litecoin on any day, but like, what's the price of like this other stock? Like, I don't know, because people just like kind of put their money in and forget about it. Cause they're like, oh, like my financial person's going to take care of this, or like, whatever, I'll just see at the end of the year how it turned out. But with crypto, I feel like people are like a lot more aware of like just, the fluctuations of it. And especially because there is a lot more fluctuation, obviously, than there would be with stock. But
Right.
um, just like putting your money in things that like you understand, that you like, because I think people are like doing research into, yeah, like how does Litecoin work? How does Bitcoin work? And all these different things where maybe not as much, you know, research into other investments, but and maybe that's incorrect in saying, because I think also there's a lot of people just like throwing money in. They don't really understand what's going on, but they're just throwing their money in. So I don't know, but I just think like the most important financial advice I could give. This is not I guess this isn't tax advice, it's just financial advice, but just like don't put your money in something that you don't understand, because that's how you're gonna
Mhm.
get screwed. So
Exactly. Good
yeah.
advice. So let's you talk something about taxable events when it comes to purchasing goods. And that's kind of I was wondering if you could kind of break that down for us, because Litecoin is the digital currency for payments. We're
Right,
hoping
yeah.
that you would use Litecoin to buy stuff. So when I buy a shirt, or if I buy like a Ledger Nano S off of the Litecoin Foundation website,
Yeah.
do I pay a sales tax? Do I pay a capital gains tax? Like, can you break that down for us?
Yeah, so you would have to report a capital gain. So let's say that t-shirt is like $30 or something, and you're buying it with Litecoin. And let's say you're buying with the Litecoin that you bought for it, like I said, like you bought for $100 and then it went up to 1,000. So like the value of it on the day that you buy the t-shirt is like 1,000, and you're going to buy that t-shirt for $30. So if it went from 100 to 1,000, basically it's just like 10 times itself. So for $30, that means your taxable basis would be $3, and then your proceeds would be 30. So basically like you're buying something for $30 that only cost you like $3 back, like when you bought it, right?
Yeah.
So it's saying basically like there's $27 there that you got because this thing appreciated, and so you need to report that as a gain. Like you're basically getting something for $30 for $3, and so there's $27 there. So when you spend that, then you need to keep track. Like, okay, of that $100 basis, $3 of that dollars is now gone. I have 97 remaining,
Right.
and so I have to report a $27 gain. And if I've held that Litecoin for over a year, then it would be a long-term capital gain. If I've held that Litecoin for less than a year, it would be a short-term capital gain. And the difference being that long-term gains would be held for or taxed at 15%, and then short-term gains would be taxed at your ordinary tax rate. So somewhere between like 20 and 40%.
That's crazy. You just did like 3 or 4 levels of tax regulation stuff, and so that was awesome. And I'm glad I asked you that question, because I honestly did not know that. I did not know I had to
Yeah, I don't think a lot
pay
of people knew that.
taxes. Hmm.
Yeah, like yesterday, like I said, I'm living in Tokyo, and they have like I think they're a little bit more ahead of the US in their adoption of crypto. And so yesterday I went to this huge department store. It's like 12 stories high. Like it has everything there. Like you can buy like washing machines, you can buy um like a Nintendo Switch, you can buy a rice cooker, like anything you could ever need. And they accept Bitcoin as payment, which is cool. Like I haven't actually seen a lot of Litecoin stuff in Japan yet. I've seen a lot of Bitcoin Cash, surprisingly, and then a lot of Bitcoin. But like I was like, oh, this would be so cool to like buy some things. But I'm like, oh, but the taxes. And I'm like, no, we need to just like forget about the taxes, just move forward with it. It's okay. Just like keep note of the taxes, but use this. Cause in the end, it's like, yeah, you're buying something for $30 for only $3. Like, great deal. Like, who cares if you have to pay taxes? It still was better than just using $30. But I just think it's cool that like there are businesses out there, there's companies out there that are accepting crypto's payment and like peer-to-peer things. There's people accepting crypto, which is really cool. But yeah, we just need to make sure we keep track of like our basis and all our different tax implications of these, because it could come back to bite us. Like I met a guy who's like got one of those like Visa cards that's like hooked up to his Coinbase account. And he's like, oh yeah, it's so sweet. Like I'm buying all these things, like cup of coffee, like, tank of gas. I'm like, oh shoot, like, do you realize like how many things you're gonna have to report on your tax return?
Yeah.
But I mean, yeah, so there's like pros and cons. You just have to like weigh them out, I guess.
Well, I know I got a job for you now. If there's not a lot of Litecoin adoption, that's your job. That's to bring Litecoin to Japan, Laura. Let's
I
go.
know, that would be so cool. I know I need to look into it more. Like I've heard of like some different like meetups and stuff for crypto people,
Yeah.
but I haven't seen any Litecoin ones yet. So yeah, I need to like figure out what the deal is here with that.
Yeah, totally. All right. So why don't we go on to our so I asked my followers and people in my email list if they had any specific tax questions for you. So
Okay, sweet. Yeah, let's dive into those.
yeah, so the first question this person asked, it's really generic. It said, how much percentage should I pay for taxes? So
Okay, so I think we kind of just answered that like in our previous one.
yeah, yeah.
Um, we were talking about whether it's long term or short term. So just that's like I guess like there's like a little tip for you. We can tie that in there is if you're going to buy something with crypto or if you're trading crypto, if you're selling crypto, those like three main taxable events that we talked about earlier. Um, if you've held something, so if you're trying to decide like, oh, should I use, this currency or this currency to buy? Like maybe should I use my Ethereum or my Litecoin? Okay, well, I've held my Ethereum for, 2 years, but I've only held my Litecoin for 2 months or something. Then you'd want to probably use your Ethereum because then you're going to get long-term treatment on that.
Okay, got it.
So anytime you can use something that you've held for over a year, do it because you're going to pay basically like half as much tax, maybe even more if you're in the higher tax brackets. But it's definitely like a good strategy. I mean, there's a lot of coins that were new in 2017 or a lot of people that got in 2017, so they're not going to be able to take that long-term treatment yet for 2017. But just think like big picture, like long-term, maybe in 2018 you'll be able to start taking those long-term capital gains or losses, or maybe the next year. But just be like aware of that. And also I'm just going to quickly dive into a little like tangent, but there's this thing called FIFO and LIFO.
Right.
So if you do FIFO, which is first in, first out, that means even though if I bought like some Litecoin 2 months ago, if I have Litecoin that I bought last year and I've held that for over a year, if I then go and buy something with Litecoin, I actually have to use that Litecoin that I bought like a year ago. Like even if I'm like, oh, I'm just like holding this one for a long term, and then I'm buying these other Litecoins and using these for purchases, you actually can't do that. You have to use the one that you bought like a long time ago.
Mm.
So these ones will still be held. They'll like slowly move back in position, but the one that you first bought is the one that you have to sell first if you're using FIFO, which is
So
the most like
how do you keep
conservative
track of
method.
that? Is that like tied to the Litecoin address then, or is it just simply like you keeping record of it on your record sheet?
Yeah, like mostly you keeping record. Like there's some programs out there that you can like basically import all your information in
Oh,
and
okay.
it'll just keep track of that. Cause like I said in that one before where like you go from 100 up to 1,000 and then we spend $3 of the basis, then it's like, okay, I got 97 now. But it's like, well, what if that 1,000 changes value the next day? Like what if it goes down to 900 or something? Then it's like, okay, like now if we spend $30 worth, it's like 2.7, basis. And so it's just like you need to keep track of like every tiny little thing, which obviously is like kind of a hassle and realizing how much of your basis you've used, how much you haven't. So I'd recommend using those different software programs out there that help you keep track of it.
Yeah, and you also mentioned like airdrops. Like, how do we treat airdrops?
Yeah, airdrops are like kind of tricky because we don't have any specific guidance on them, obviously, because in 2014 they weren't a thing. But airdrops, to me, I think the best way to treat them would be when you receive them, because you're not like putting any value in, like you're not paying for them like an ICO, like they just appear. Um, Whatever the value is on the day of there's two treatments. Let me just explain them both, and you can kind of choose which one you want to do
Okay, good
because we
idea.
don't. Sorry.
Yeah, good. No, good idea. That's good.
Yeah, so the two like main treatments that I've seen among like other tax professionals is that one is the day that you receive the airdrop, whatever the value is of that airdrop on the day, you would include that as other income. So it's basically just like a gambling winning or something, like basically like I just won this. Like I didn't really have to do anything, but I just like won this money basically.
Right.
So whatever, let's say you received a coin on that day, it's worth like 20 bucks or something. So then you would just put like 20 bucks in as other taxable income on your tax return. And then at that point, if that coin goes up in value, down in value, it's all based on that $20 basis. So that 20 bucks becomes your basis. So if in like 2 weeks it's worth 40 and you sell it, then there's a $20 gain there. So that's one way you can treat it. But I know a lot of people like just receive airdrops and they like, didn't even really want to, like it just came, or like they get an airdrop and like it's like some dumb coin that just like crashes in 2 seconds, or like, within a day it's worth nothing. So it's sometimes can be hard to like keep track of all those and include those all as income when they don't really have a potential to be worth anything long term. So if that's the case, or you feel like that applies the most, like what you can do instead is that on the day you receive it, just mark down the day you receive it for your holding period, but make the basis as 0. Like the basis for all airdrops is 0. So then at that point, if it goes down in value, you won't deduct any losses. But anytime it goes up in value, if you decide to hold it, you're actually going to keep track of this coin. This is something you plan on holding in your portfolio. If that goes up and then you sell it, then at that point you would recognize a gain when you sell it. But at the airdrop time, you're not doing anything besides like recording the day that you received it so that you know for your holding period.
Yeah, my experience with zero cost basis is that you'd have to pay like the full price of the coin. So I personally would probably be more incentivized to peg a price on it, so I don't have to pay as much as capital gains tax on that.
Yeah, so you can, yeah, it's totally, I think it's up to you to choose. Until we have further guidance from the IRS, unfortunately, like we are having to choose on a few different things.
Yeah.
So I think as long as you just like understand the consequences of both, or like how both of them work, whatever one you feel most comfortable with, you can just go ahead and do it. And then if you ever get audited and the IRS comes back, you can just explain why you did it. And if they disagree, then at that point you might have to change. But if not, then I'm sure if you're just consistent in your method, like it's not like some coins I do this, some coins I do that. If you're just consistent in your method, I think you'll be totally fine.
Cool. All right. So the next question I have is this guy wrote, I started a hedge fund and would like to know how to handle 2017 taxes given we didn't have an LLC set up.
Okay, so
Yeah.
this one is kind of tricky. And I'm not an expert on hedge funds, but I can just tell you like basically how they're supposed to work. It sounds like you didn't have it set up. So you might want to get with a professional on partnerships, because how a hedge fund setup is supposed to be set up is a partnership. So basically, there's one person who kind of puts it together. They organize it as a partnership. Everyone, puts their money in. Maybe everyone puts $100 in. They invest. They all decide to invest in a few different things as a group, and then at the end, whatever the earnings are, you just like split it up. So for this, yeah, you need to have a partnership set up. Sounds like you didn't, so I'm not exactly sure what to do in that case. But just know going forward, if this applies to you, like you need to file K1s for each of your holders, send those out to them. So you might be able to do it in retrospect because you didn't have an LLC set up, or it might just be as easy as, okay, everyone put in $100, so their basis is all going to be $100. Everyone in the end received $200 back. So let's just say it's $200 short-term gain. And maybe that's just the best you can do this year, but just know like going forward, you'd want to have a more robust structure and like have something more official set up. So it's kind of hard to say exactly what you should do, unfortunately, but that's kind of how it should work. So maybe using that information, you can decide what you should do going forward, at least what you should be asking.
Okay, cool. So I'm just gonna jump down to another question. It says, this guy asks, this one kind of makes me a bit sad, but it says, if I bought multiple Litecoin at $350, holy crap, that's the top, and sold at $300 for a loss, how should I go about taxing this? And how should one go about taxes if they move Litecoin to gambling sites and lost it all?
Ouch.
Let's go with the first question. Like, if you sell at a loss.
Yeah, so that's actually, I'm glad you brought this up because I think a lot of people don't realize that if they lost some money, there is a silver lining for them. I think a lot of people are like, oh, I don't need to report anything because I just like bought some and lost it. So like there's no point. But actually, there is something you can do. You can actually deduct your losses. So for this guy, if he bought multiple Litecoin at 350, sold at 300, he has a $50 loss on each one. And you can deduct $3,000 net of losses at the end of the year. So that means if he has gains from other coins, and then he has these losses from the Litecoin, if he has a $50 gain on Bitcoin and a $50 loss on Litecoin, he can actually like combine those, and then he has nothing really to, I mean, he still would report them, but he has nothing to be taxed on because $50 and $50, they just offset each other. But if let's say he has a $50 Bitcoin gain and 150 Bitcoin or Litecoin loss, then the $50 and the 150 would offset. So then he could actually deduct a $100 loss on his tax return just against all of his other income. Also, if you have like stocks or any other capital gain income, you can use losses on crypto to offset the income from that. Or if you have like maybe you have like a house you invested in, or you have gold or stock or anything else, and those went up in value and your crypto went down, you can offset those so that you don't have to pay as much tax. And if you only had losses, if this is the only thing this guy did, he can deduct it up to $3,000. And if he has more than $3,000, I feel sorry, but you can report $3,000 this year. And then just like anything in excess of that $3,000, you can carry forward next year. So hopefully next year is like a better year for you. Maybe you have some gains. You can use any of your excess to offset those gains as well. So always report it. Even if it's over the $3,000, report the full amount so that you can carry it forward from year to year and just like use it to offset all your income.
Very cool. I did not know that you can carry it forward to the year after that.
Yeah, and like you can continue keeping forward. So like, let's say you had $20,000 in losses, you would do three, you know, and like hopefully in those next years you would have some gains to offset those losses so that you could like recognize them quicker and quicker. But if you just went into crypto, had a loss, and just like, I'm getting out of crypto forever and I'm never investing in anything again, then you would just do 3,000, 3,000, 3,000 each year until you run out.
Got it. Okay, what about this second question that he asked about gambling with Litecoin on the sites and losing it all? How does that work?
Yeah, so with gambling, it's a little different. You can actually only deduct your gambling losses up to your gambling gains. So if you lost it all, sorry, you can't really do anything. But if he had any other gambling gains from the year that he's reporting on his tax return, he can report those losses to offset them. But you can't deduct gambling losses in excess of gambling gains, unfortunately.
Oh man, I feel really bad for this guy. Oh well.
Yeah, me too. But hopefully 2018 will be a better year.
Yeah. There's always next year.
Yeah, always next year, and just keep those losses going.
Yeah. Okay. So another question is, if you haven't sold any of your crypto for fiat, or I'm assuming any other coins, do
Yeah.
you owe any taxes on it?
So maybe is the answer. So when we were talking about taxable events, I just want to say, like, also, if you buy crypto, that is not a taxable event. So if they have only bought the crypto this year and did nothing else, nothing to report. Even if you bought it for $500 and now it's worth $500,000, doesn't matter. That 500,000 is irrelevant if it's still sitting there. So if they haven't converted to fiat, which is USD, then they might still have to pay taxes because, like we said before, if they used it or traded it, then they would need to report taxes on that. So it's hard to say not knowing their situation, but just to add on to that, like I said, yeah, if you bought it then and you're doing nothing else, buying is not a taxable event.
Got it. So this next question, I think he channeled Carly Rae Jepsen a little bit. He was like, I don't know you, and this is crazy, but what my crypto taxes maybe.
Crypto taxes maybe. Yeah, that's a great song. But I actually was one day went to a concert and Carly Rae Jepsen was like the opener and she
Oh,
was singing
wow.
that song. And my husband's like, how did we end up at a Carly Rae Jepsen concert? But actually it was she's not that good live, unfortunately. But
Oh, sadness.
yes, I am a CPA. I do taxes for people. So if you're listening to this and you're like, oh shoot, I'm screwed and I have no idea what I'm doing, feel free to reach out to me and I can help you with your taxes. It's just cryptotaxgirl@gmail.com, or you can hit me up on Twitter, Cryptotaxgirl, whatever you want. But reach out to me and we can totally help you out.
Yeah, I linked your Twitter and your website, and I think your website also includes your email. So if anybody is struggling with their taxes and stuff, definitely reach out to this girl because she knows what she is talking about.
Thanks. Yeah, it's been great so far. Really liking it. And also on my course too, if you're like, I mean, we only kind of skim the surface on high level crypto tax stuff today, but if you're wanting to learn more, and especially if you're in crypto, I highly recommend that you learn more because everything you do is going to have like tax consequences. I have like a course that walks you through everything you need to know in taxes, and it's like totally self-paced. It's just online, and it's all like divided by category. So if you're like going through and you're like, oh, forks, like I need to look at how that works, you can like click on it, watch it. There's a bunch of different ones. So if you want to check that out too, like feel free, go to my website, and it's just all linked right there so you can see it. It's cryptotaxgirl.com.
That's great. I'm all about empowerment. I'm all about educating people, and that sounds like that's exactly what that website will be doing.
Yeah, hopefully, you know, we can just like all learn a little bit more bit by bit and so that we don't get in trouble.
Yep. All right. The next question is there any good tax software or tracking system to calculate gains?
Yeah, so I have liked cointracking.info. I've liked bitcoin.tax and tokentax.us. Those are different ones that I've seen so far. I know there's other ones out there, but those are the only ones I've kind of jumped into and looked at myself. Personally, I've been using coin tracking because I don't know, it's just the one I started with. But it's been good so far. And like for my clients, like some of them do like margin trading and stuff, which is
Oh, geez.
a little bit more advanced. So a lot of I haven't seen another software yet that's able to handle margin trade. So that's why I've been using coin tracking just for them. And like, yeah, if they have like some of them have like 30,000 trades plus in a year. So it's been good to use that one because it can actually handle it. There is some things I don't like though. Like I've noticed so far, if I like buy anything with my crypto, like I use some Ethereum to buy like a DApp or something, it doesn't include that. So you have to like go and manually put those in. Or like if you gift crypto, like I gave my brother and my mom some crypto for Christmas and I had to like go in and manually put those in. And even though those aren't like taxable events, you want to put them in because it shows like part of your basis is leaving you. Um, and if you like transfer between exchanges, it doesn't always pick that up. So there's like some manual things you need to go in. So whatever one you use, I would just like make sure you have your like exchange open kind of on half the screen, have this program on half the screen, and just kind of go through your transactions and like different types of transactions and make sure it's picking them all up. And if it's not, just like do the manual ones because even if it's not a taxable event, like yeah, transferring between one exchange to another, you just want to keep track of all this for like basis purposes and all that, you know, stuff. So just kind of go through and make sure accurately depicts what you're actually doing in the year.
Yeah, I actually use Bitcoin.tax, and it's pretty
Oh, nice.
useful and makes my life so much easier. I literally download the CSV, upload it onto the website, and they do everything for me. So it's pretty great.
Oh, good. Yeah, I'm glad you had good experience with that one. I haven't totally dived into it yet, but I'm planning on doing it this week so I can kind of see more about it.
Cool.
Has it been able to show you like when you transfer between exchanges and when you use
No,
it to
it
buy
doesn't do
things?
that. Is that what
No.
coin tracking info does?
No, it doesn't either. So I've had to do that
Oh,
one manually. So it sounds like maybe you're just gonna have to do that no matter what.
yeah, it's tough. Okay, so this next question is a bit more, I don't even understand what it's asking, but it says, are 1031 like kind exchanges in 2017 valid?
This is like the most common question out there when it comes to crypto and taxes. Yeah, you've probably never heard of it because it's like no one's ever heard of like kind exchanges except for like tax people. But then all of a sudden, some like Forbes article or something wrote something about how you can use like kind exchanges as like this. It was like a clickbaity title that was like new 1031 exchange like allows tax loophole for crypto investors. And it was like, this is what I'm saying when I'm saying there's bad info out there. But yeah, no. So 1031 exchanges are basically when you take one like kind property and one like kind property, two different ones, you swap them, and then neither of you pay gains on the appreciation because you're both ending up with a property kind of like you had, but it's just a little different. So, like, example, if I have this painting and you have this painting, one's like Picasso and one's like Monet or like whatever. I'm not an artist. I shouldn't have gone into art, but anyways, I'm in this example already. So we both have these different paintings, and I'm like, oh, I think I want to switch it up. Like, I want some Picasso now. And my friend's like, oh, yeah, I'm also wanting Monet. So then we're like, okay, let's trade. So then we trade. And maybe when we got these paintings, they weren't worth as much and years have gone on. So it's worth more. But it's basically like we can just trade these and it's not going to be taxed on the gains on these because in the end, we're both still getting a painting worth equal value. And in the end, when we sell these, then we'll recognize the gain. But for now, we're still holding it. So it just acts as if like you're always holding your property. It just kind of switched. So that's what a like kind property is. So everyone, well, not everyone, some people out there are saying that crypto counts as a like kind exchange because you're taking one crypto, another crypto swapping, and so you don't have to pay taxes when you trade them. But it's not true. At least I'm not comfortable taking that position for a few different reasons. I've like done some long Twitter rants about all the reasons, but one of the main reasons being that like it's hard to argue that two different cryptocurrencies are the same. I think like everyone on here could probably give me a million reasons why Litecoin is different from Bitcoin, or why Ethereum is different from Bitcoin, or why they're all just so different. They all have different purposes. They're all set up for different reasons. There's different founders, all different things. And so if you're like, well, I don't know, I think they're pretty similar. Well, just to like give you some examples, like trading silver for gold is not like kind by the IRS.
Oh, it's not.
No, it's not. Even like trading some gold coins, one that has like 20% gold and one that has like 5% gold, like that also isn't like kind.
Oh shoot. So definitely cryptocurrency like does not exist.
I don't think so. So based on those things, and even like trading like a female sheep for like a male sheep, like that isn't like kind. So I'm like, yeah, I don't think this can be like kind. And if you really in your heart of hearts think it can, you need to like get a tax lawyer, I would say, to like validate this and say, yes, we have done the research and based on the following reasons, this is the same and we're taking this position on our tax return. But so first off, that they have to be like kind. That's like the biggest caveat, and I don't think that cryptos can be like kind. And then second off, you have to like report this on your tax return. You can't just say like, oh, I'm taking like the like kind exchange position, so I'm not going to report my trades because I'm just going to take this position. You can't do that. You actually have to disclose it on your tax return. I'm taking the 1030 position. I have cryptocurrencies that I want to qualify under this position. And for every single trade, you have to file a form saying what your basis was, your proceeds, what your coins were that you exchanged, and why it's not taxable or whatever. So it's like a lot. Like if you do this every single day, like that's a ton of headache and paperwork.
Yeah.
And there's just like so many other reasons. Like we don't need to dive into all of them, but I do not recommend like kind exchanges. And I think like only like less than like 0.05% of the population reports these on their tax returns. I think like it will flag like something. So
Got it.
yeah.
Cool. So another area of I think where people have a difficult time conceptualizing what is a taxable event is like there's different values, right? Like so on all
Yeah.
these exchanges, they're pegged at BTC or ETH. But obviously Bitcoin has a US dollar value, right? So I think
Right.
that this guy, he is asking this question, and I think that's where he's getting confused. So he says, how do taxes come into play for trades where I sell, then buy for US dollars profit, but a net loss of Bitcoin?
So, sorry, you buy. Sorry, say that one more time.
Okay, so he's doing a trade where he sells,
Okay, sells first. So he has crypto, he sells it for US dollars, right?
yeah, and then he buys in US dollars, but at a net loss of BTC. So I guess let's say I had like Litecoin,
Yeah.
and then I sell it, and then the market goes up, and then so I have less Litecoin than I would have if I bought it back. So okay, so let's say I had let's say I had $100 of Litecoin and I sold it at $100, but
Yeah.
all of a sudden the market moved up to $200.
Right.
And then I buy back my Litecoin at 0.5 Litecoin.
Oh,
So
but yeah, so you have less Litecoins than you
yeah,
started with.
how does that
Yeah.
work?
It just would that first time you sell, they're like basically not related. So the first one that
Oh,
you'd sell, the $100 one, whatever your basis was in that. So if it was $10, again, you'd recognize the $90 gain there. If you go back and sell it, then your new basis is $200 and your holding period starts over. So this is not a good strategy. Don't do this because if you're going to get long-term treatment, like you're not going to get it because you're going to have to reset the clock on that. And you have to recognize a gain. And then you're also like rebuying. I mean, your basis does go up. So at that point, like if it went down tomorrow, you could recognize a loss to offset that previous $90 gain. I guess that's the only way it would be related. But by doing that, yeah, you're resetting the clock on your holding period and you're recognizing a gain on the first sale.
okay. So I don't know how much time you have left to hang out with us, but would you mind if we move to the chat box a little bit?
Sure.
Okay, cool.
Yeah, maybe
And
like 5 more minutes.
5 more minutes. Oh shoot. Okay. Let's see. If when it comes to what about service fees from exchanges to purchase, are they deductible?
Oh, yeah, that's a good question. So in 2017, those are deductible as investment expenses. So keep track of those. But they are not deductible in 2018 unless you buy crypto as your business. Then you can. So actually, if you do have a lot of transactions, could be good to like maybe set up like an LLC or if you have a business, use crypto in your business to buy and sell because you can deduct those transaction fees just unlimited. In 2017, on your personal return, you can deduct them, but they are like limited by certain income levels and you have to reach certain thresholds before you can deduct them. So you can deduct them, but you might not be able to deduct all of them. But then in 2018, on your personal return, you can't deduct them at all.
Got it. Okay. And then let's get to Jonathan Bishop's question. Are you familiar with Steem at all? Like Steam It, the platform?
Ish, but not totally.
Yeah. Okay. So basically, you have posts, and then people upvote it, and then you get Steam dollars as a reward for how popular your content is, right? But
Okay.
one thing that happens is you can pay in Steam dollars to gain Steam power, and when you gain Steam power, it gives you more voting leverage. So if I'm powered up, I push a upvote, and then someone else, and then it counts more in Steam dollars on for that post. So this guy is asking, if I transfer Steam dollars and I transfer it into Steam power, is that a taxable event? Even
Not
if
sure.
even if it's in the same wallet.
I don't think I know enough about it to speak on it, unfortunately.
Yeah, I mean, okay, so I mean, based off of the principles that you gave me, I would probably say it is a taxable event because you're purchasing a service. Um, you're transferring Steam dollars and buying Steam power, which then powers up your voting power on the Steemit platform. So
So
I
it
don't
would
know.
only like
Mhm.
purchasing though, the only reason purchasing is a taxable event is if the thing you're purchasing with went up in value. So I don't know if these Steam dollars, do they have like USD value?
Yeah, both of them fluctuate. So the values fluctuate. So yeah.
So it's and Steam Power, is that are they like two separate currencies, Steam dollars and Steam Power dollars?
Yeah, I think.
Sorry, I'm sounding like the ultimate noob right now.
No, I mean, even I'm not 100% sure about
If they're like
how to
two
use
different
them.
currencies, I would say like yes, like whatever the value in Steam went up when you bought the Steam Power, and then the Steam Power becomes your basis. But yeah, I don't think I know enough about it to like speak eloquently on it.
Okay, so no, you bring up a good point. If Steam Power rises in price, then yeah, it might be worth considering it as a taxable event. Cool.
Yeah, not too sure about that. I might have to look into it more. So reach out to me and we could maybe dive into it together.
All right. Well, Laura, I wanted to thank you so much for joining me. We went over. I thought that this was only going to be 30 minutes, but
I know, it's just crypto just does that to people.
I'm so sorry, but thank you for being so flexible.
Yeah, no,
And
it's fun to be here. I think we had some good chats.
cool, cool. All right, so you can totally sign off. I'm gonna try to chat in the chat box a little bit if anybody wants to hang around and talk. But yeah, thanks for stopping by.
All right, thanks. See you guys. Bye.
Yeah, totally. Crypto Life. Every time I get into a conversation about like Litecoin or crypto, the conversation always ends up being for like 30 minutes, an hour. It's crazy. How can they track anonymous transactions? Well, that's the thing. I think when cryptocurrency was first advertised, they called it anonymous, but that's kind of a misnomer. It's actually pseudonymous, right? Because it's tied to your Litecoin address or your Bitcoin address. And so you can still keep track of who gets paid how much based on your address. And a lot of people nowadays, they like to paste their address on social media profiles, on websites, on businesses as donation addresses. And the moment you do that, you immediately tie that Litecoin address to your personality, to your profile, to your business. And so that's how they kind of keep track of who gets what. And yeah, so that's one way that the IRS can figure out if they hire a company to, they can figure out if you've been avoiding taxes, if you've posted your Litecoin address or your Bitcoin address to your profile. So it's an unfortunate side effect, but hopefully they're trying to fix this problem with the process called fungibility, or they want to increase Litecoin's fungibility through something called confidential transactions. So hopefully, I think Gregory Maxwell is working on that technology. He actually recently left Blockstream to do that. So hopefully it'll be coming out sometime in 2018. Yeah. And on that note, sometimes on the subreddit you'll find some posts of people saying, "Oh shoot, like Coinbase shut down my account because it was," and then the email they gave me was because it was tied to the dark net or something like that. And that's actually very, very possible because the blockchain, it records all the addresses on ever. Yeah, it just records all the addresses that every transaction has ever happened on. And so what Coinbase might do is they might go on the dark net and um, they might find these businesses or these websites that post the Litecoin or Bitcoin address and then keep a record of that. And so if your Litecoin that you're trying to deposit into Coinbase is tied to that specific address, then they can definitely tell and pick up the fact like, oh shoot, it would flag in their system and say, oh, we're receiving a Litecoin right now, or we're receiving a Bitcoin transaction right now that was tied to a darknet address. So that's probably how Coinbase is keeping track of whether or not currencies or Bitcoin or Litecoin are tied to the darknet, and that's why some people's accounts are getting closed down. So if you didn't know, you should definitely try doing that, or not try doing that. Sorry, you should definitely be aware of what's happening, and if that happens to you, that's why. Cool. Do you guys have any more questions? Thanks, Bucking. Thanks for subscribing. Appreciate that. All right, I think that's it. Thanks for hanging out with me. Hopefully, you found this very informational. My next live stream, actually, I was able to contact a Lightning Network dev. So his name is Alex Bosworth. So you guys are getting the inside scoop. I'm going to be tweeting next week asking for questions. So stay tuned for that on my Twitter and on my email list. And yeah, I will catch you guys later. So, how's your day going so far?
Going good, thanks. How about you?
Yeah, I went to the gym a little bit earlier today, played some basketball.
Oh, nice.
Yeah.
Yeah, I'm actually living in Tokyo right now, so I just woke up about half an hour ago.
Oh, no way.
Yeah, it's already Thursday over here. Future's looking bright.
That's good. Do you guys do breakfast and stuff or?
I'll worry about that later. There's not a lot of options for breakfast in Japan. The only cereal they sell in this whole country is Frosted Flakes, so it's basically Frosted Flakes every day or
Oh my
toast.
gosh. That can get pretty boring, I feel like.
Yeah. So sometimes I just skip it. Wait for lunch. Hold out for the ramen.
Oh man, dude, I love ramen so much.
Yeah, I can definitely relate. Like every single day is basically all I want to eat for lunch and dinner. Maybe even breakfast. I'll start
Oh.
eating it when I get tired of Frosted Flakes.
Yo, I mean, like, not like the instant ramen. Like the instant ramen is nice too, but like really the like where they
Yeah,
put
the
pork in it and then roast it in stew and stuff. Oh,
fresh stuff. Yeah, it's pretty good. The instant ramen though, I have a new love for because we went to the Cup of Noodles Museum and we made our very own instant ramen. Like made the dough, cut the noodles. So now I have a love for instant ramen too. But the real ramen for sure is my number one.
yeah, good point.